Good morning. For Traders Exclusive, this is George Tkaczuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Let's take a look at the equity markets and what's going on. Basically, the S&P 500 hit a new high last Thursday, and on Friday reversed a little bit. NASDAQ got above 8,000, and the Russell 2000 has been able to get above its 200-day moving average, but still lagging the markets. So generally, we expect a little bit of drama here as the S&P hits new high. Probably the market has to punish those new high buyers. And we'll see what happens here, but so far the action's been fairly constructive. Today's pretty much of a flat day. Some of the technology stocks are getting hit this morning, but still constructive coming into their 20-day moving averages and so forth. One of the things I do want to talk about is there's some pretty good contrarian indicators that are telling us this market may still have lots of legs. Specifically, the amount of money flowing out of equity funds into bond funds is pretty much at 16-year highs. And that's the type of action you normally see at the bottom of bear markets, not at the top of bull markets. Similarly, bearish sentiment by retail investors is pretty much at the levels we've seen over last Christmas. And again, levels that we see near bear market bottoms, not near highs. And of course, another thing is the Bank of America and Merrill Lynch fund managers' cash positions at its highest level it's been in 16 years. And again, all these things are contrarian indicators, meaning everyone's scared, sentiment's very poor, and these are the kind of things you see at the bottom of bear markets, not near market's highs. So that tells us this market might have room to run. Now this week we might see some profit taking end of the quarter. That's typically the kind of thing you see. Now over the last few weeks I've talked in length about the software sector being the hottest sector, and that continues to be, although today a lot of those stocks are pulling back and they're either resting their 10 or 20-day moving averages. So if you miss some of these, this is a place you might want to take a look at. Now, of course, this is a trade recommendation. These are just some of those stocks that have been very hot over this last year, and that's like stocks like ServiceNow, symbol NOW, or Paycom, symbol PAYC, Coupa Software, COUP, or Okta, OKTA, Altasian, symbol TEAM. Those are some of the stronger software sector stocks. Now, if you don't like that sector, if you're looking for some new, there's two other sectors that are doing very well, and that's the solar sector and the gold miners. And gold miners, your top stocks probably there are Kirkland Lake, that symbol is KL, Anglo Ashanti, symbol AU. A little bit extended, they've been rallying over the last few days, so just keep that in mind. Or also the solar stocks like Solar Edge, symbol SEDJ, SunPower, SBWR, Sunrun, symbol RUN. So these are just some to give you another idea. Take a look at the gold miners or the solar stocks. These are also performing very well as this market continues to kind of flirt with the new highs, and we just have to see how all that works out. So like I said, as always, let price and volume be your guide. We have some pretty good contrarian indicators telling us this market may have room to run, but as always, let price and volume be your guide. This is George Tkaczuk, we're RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago, and have a great trading week.